Hi, good evening, everybody. It's Yvette with BSTA Solutions, and I'm here on Tax Tip Thursdays. Today, what I wanted to cover is the estimated tax payments. So you may need to make estimated tax payments if you have self-employment income, freelance or gig work, rental income, investment income, certain retirement income with insufficient withholding, or certain business income from partnerships or S corps. So those are the different situations where you may have to make estimated tax payments. So if you're expected to owe at least $1,000 in tax, then you are required to make estimated tax payments. So what happens is the IRS does expect you to pay as you go. So as you earn the income, they expect you to pay the tax on that income. So it's a pay as you go system. The different timelines that you have to make these estimated tax payments are as follow. So January through March 31st, you would have your first estimated tax payment due April 15. April 1st through May 31st, you would have your next estimated tax payment due June 15. And then June 1st through August 31st, you would have your estimated tax payment due September 15. September 1st through December, you would have it due January the 15th the following year. So how do you even know what to pay? So a lot of the times when you do your tax return and you owe the IRS, the tax preparer should give you a schedule of estimated tax payments for the following or the upcoming year. Please refer back to your tax return because that should be there, especially if you have a tax liability due of over $1,000. You should have a schedule of estimated tax payments along with vouchers and how to make those payments. If you don't, a good rule of thumb, there's some safe harbor rules that you can follow. One is you pay 90% of what you owed the prior year. You can get that 90% divided into those 4 periods and then just make those estimated tax payments, or you can pay 100% of what you owed the prior year. You get the 100% of what you owed the prior year, divide that into the 4 periods, and make sure you make those payments. So doing that does help you eliminate a lot of the penalties that people get when they have balances due at the end of the year. Also, you can make your payments online going to the irs.gov website. Businesses, you can make payments using EFTPS. You can send in checks, but usually the online website is preferred because the IRS is trying to move away from manual checks. But yeah, that's your information on estimated tax payments. Another thing that I did want to cover is filing extensions. So when you file an extension for the current tax year, that does not cover your payment. So the IRS does expect that you make your actual due amount by the due date of April 15, that you make that payment. The extension only covers the filing. It does not cover the actual payment. So you will still have penalties applied if you owe a balance to the IRS. Just because you filed an extension to October does not mean that you are exempt from making your estimated payment or the amount due for that tax season. Okay, so that's all I have for today on Tax Tip Thursday. I will see you all next Thursday. Have a good evening.